Hello, everyone. Today is Friday, January 20th, 2023. My name is Evan. Welcome back to another edition of Stock Market Weekly presented by The Trade Risk, episode 667, where we break down the most important trends, price action, and noteworthy moves across financial markets to prepare you for the trading week ahead. Let's jump into some of what we're going to be talking about in this week's episode. Stocks pulling back and resetting those sort of extended overbought conditions that we've seen for most of this new year. We have the Nasdaq, which is continuing to build on its recent leadership role. So that's right, Nasdaq stocks are finally starting to outperform and in fact lead a bit to the upside here. That is a change of leadership, and that is a change of the stocks that really have been capturing investors' attention. A few weeks ago, everybody was staring at Apple, Tesla, Microsoft as breakdown candidates, bracing for Nasdaq at new lows, and suddenly we've got this quick turnaround here and march up to the other direction. We have the VIX popping a few points off of its 18 handle lows. The dollar still can't hold a bid, so there's nothing new there. And we got earnings season starting to heat up. So let's go through the numbers here, and then we're going to jump into some charts here in part two. On the data side here, S&P 500, it was a mixed week. So S&P 500 was down a little less than 1%. NASDAQ was up almost 1%. Russell 2000 was down a little over 1%. And world stocks outside the United States did pretty well, up almost 1%. So really did depend sort of the sectors that you were positioned in this week. It was really a tech leadership sort of role, as we'll look at in just a second. You can see the 1 month numbers here for markets. We're basically now solidly in the green here across the board. Now, if we take a look at these market trends, we've got this same behavior here where the short and medium term averages or look back periods in the market are starting to rise and move up into the right. And this behavior is basically continuing here. It's not new. It's been persistent, and we're seeing that in evidence by the upward sort of drift on most stocks. Now, the long-term trend still very much down. The 200 SMA still declining across the board, but we are getting this counter trend primary rally here in equity markets. Now, volatility regime was up this week, so we really, kind of plummeted in volatility. So the S&P 500 hit one of its lowest levels in basically the past year, around 18. And so this week, it finally got that knee-jerk reaction back to the upside. It popped up to about 21.5 or so, and then it proceeded to sort of roll over a bit back below 20 into the weekend. Same thing for the Nasdaq. It runs a little more of a premium here, up in the mid 20s, but very similar behavior. And same thing with the Russell. All of the volatility indices were up this week. Now, most importantly here is something I've been talking a lot about, is the improvement in market breadth. 52-week highs minus lows here, still in the bull camp. So you can still see that we're getting outpacing stocks hitting new highs versus those hitting new lows. We did dry up a little bit here in the end of the week on Thursday specifically, when we had, really the kind of more pronounced sell pressure day in the market. These Friday numbers are preliminary, so typically they're actually lower than what the final numbers are. I have to just do a quick guess on these numbers, or preliminary calculations, not quite a guess. So we'll see where Friday's numbers come in, but I'm going to be watching this closely because, again, if you look at where Friday was, Tuesday, Wednesday, all triple digit stocks hitting 52-week highs. And so that's where, I really want to see us stay to remain committed on the long side. In fact, I want to see this expand upward. So we're going to keep a very close look here. If we just drift and fade back down to, the zero or single digits or low double digits, and then the number of new lows start upticking, we're gonna be back in the same old sort of environment that we were in 2022. So we're gonna keep a close eye on it for now. now, bulls defending and doing what they need to. Now, in terms of sector performance, again, most things were in the red this week. So industrials were the biggest hit, utilities and consumer staples all down about 3% on the week. On the upside, we saw communication services, energy, and technology. So again, a very kind of tech heavy and mega cap weighted, movement here. And that, minus energy, which was, just rebounding on its own. But these are the big heavyweights here that really move the needle. And again, you saw that with the Nasdaq performance, which was green on the week. Now, if we look at IBD industry ranks here, so shout out to IBD. They're a sponsor of our show and content. They help make the show possible. So every day they post these tables here of the industries that are in their top ranks. And so when we look at the list here, we still got that oil and gas, kind of sprinkled in. We still have some retail in here, and we still have industrials in here. So it's a pretty spread out, kind of diverse leadership roles in terms of industries. Steel producers here you can see is really kind of jumping up this week and making its way towards the top 10 list. So I think that's interesting, and it's going to be interesting to see how this all shakes out as we get through earnings season. We start to see some moves. We did see, as we mentioned, industrials here, really big hit this week, and so we'll see if they can continue to hold their own in this list as well over the next week or so. All right, now if we finish off with the state of our two quantitative models here. So we run two trading systems, Merlin and Lamerick, and there are some notable updates here that I think would be interesting to make note of. Our long-term system, Merlin here, a longer-term system, is increasingly becoming more active in this market. So for the better half of 2022, certainly the latter half of it, it really wasn't doing a whole lot. I mean, it was very cash heavy, some defensive positions on, maybe an ETF here and there, but it really was not, enjoying the market environment that it was being dealt. But that is starting to change. You can see now it's got 43% of its exposure now deployed. So it still has a lot of cash on hand, but it was doing a lot of buying this week and starting to accumulate some positions. So I do think that's interesting, notable that it is finally starting to come alive here. And our short-term system, Lamerick, so this one is just currently balanced right now. It's got shorts and longs on. In fact, I think it's only one long, one short on. But it was very active this week. It had a lot of shorts at the beginning of the week, and it covered pretty much all of them. And it's just going in pretty cash heavy into the weekend. So these are fully rules-based trading systems. They run entirely without me, without my discretion, without my input, without my order entry. So if you want to learn more about these two trading systems, we do have them available. You can join as a subscriber. You can see what they are up to, get nightly trade reports. There is a $1 trial that you can take. So if you go to traderisk.com/trial, you can check that out, or you can just read more about the systems and their performance and what they're up to on our website as well. So with that, we'll be back here in just a second with part 2. All right, we are back. We've got TC2000 open. We are looking at the S&P 500 cash settled market. It's a weekly time frame here, and this is our roadmap that we've been looking at for quite some time. First off, just notice the range this week. So we do have this big tail at the all the way going down here to the sub 3,900 zone, and almost probed last week's lows, didn't quite get there, and then really got that drive back up towards the upper end of this week's range. But certainly, again, a nice little shake and bake here, and kind of a reset of those overbought or extended conditions that we talked about. And quite frankly, this is exactly what I was hoping for. This is exactly what we sort of game planned or talked about the ideal scenario was. So as a matter of fact, I'm going to actually play a clip from last Friday's Stock Market Weekly video right now. And for me, it was enough to just scale some off here and take some gains off. I still am, net long here in terms of this positioning. And I would prefer, again, my ideal situation, again, getting very tactical into my own strategy, but I would love to see a 1-2 day shakeout here early next week. And I would essentially use that as an opportunity to sort of reload on the long side, provided we stay above 3,900, provided, the market breadth stays intact and all the things that we look at on a week-to-week basis. So, all right, I'm back here. And so, it is always wonderful when the market cooperates with a plan or with an ideal vision here. And we, basically got exactly that. We sort of recognized last week that there was some underlying strength coming in, with market breadth, with the VIX unwind with a dollar that was just continuing to stay weak. And we sort of outlined all of these factors that were getting increasingly bullish here in this new year. But we recognized in the short term that we were quite extended, right? We were running really hot coming into this week, and it did take an extra day or so, but the market did get that big, kind of 2-day reset here, and it came right into this 3,900 zone and, briefly undercut it, but sort of closed right into it. And then we got the big springboard off of it on Friday. So this is about as picture perfect technically as I could have dreamt up. It was my ideal sort of bullish perfect scenario. And in fact, I did carry out my plan. So I was buying fairly aggressively here on Thursday. And the reason I like to buy aggressively here on Thursday, even though it looked incredibly dangerous, is because I didn't need to give this a whole lot of room. And if we basically came in on Friday and we continued to sell off, or we gapped down, or we started to just hold below 3,900, I would have exited and been able to take off, what I would consider to be a very small percentage, stop loss here, and just take that position off. And so that's my personal approach to this. I don't think it's for everyone. I think a lot of folks are a little uncomfortable buying in those situations, and I do think it's a little more of an advanced strategy. You just have to have a good handle on position size and risk management. But lo and behold, here we are. We got this nice springboard off. I do have a full S&P position back on. I'm still looking for this to hold, approximately the lows now going forward, around 3,900. And so I want to see the majority of this candle, held in there going forward into next week. And ideally, I want to see forward progress back up and ultimately take out these 4,000 highs. I mean, this is the hurdle now. I mean, this is where we are sandwiched in between in the very short term, 4,000, 3,900. And so, for momentum to really build here, and I'd say for the next leg to, really get going, we're going to have to take out 4,000, and we have a lot of catalysts on deck. So we've got earnings season heating up. And in fact, we've got the Fed February rate hike decision coming up in, I think it's February 1st, or it's right in that first week. I have to double check the dates, but we've got, two big series of catalysts, the Fed and earnings. And I think, this is going to be, kind of the fuel that the market needs to get a breakout move one way or the other. And so right now, with kind of all the technical underlying strength that we see building here, my bet is it's to the upside, but that can obviously change. And I'm certainly not held to that opinion. So if we start to roll over, if we start to lose this area in here, then I'll be quick to drop these positions. But for now, looking to stick with some strength. I'm looking and sort of applauding the dip buyers to stepping up here. Now I want to see it hold going forward. I want to see momentum carried through next week. And again, we'll see if we can break through 4,000. I do think if we break through 4,000, it is a very fast move up to about 4,100. So that'll be another few percent. And I think it comes extremely fast in a day or two at most if we start closing below here. And then, we've got bigger levels to deal with. And, once we get there. But for now, holding where we need to, and a nice little kind of reset here with momentum intact. Now, Qs, as we mentioned here, are the leadership group right now. So if you take a look at the Nasdaq, you can see that they pulled back off of this same exact zone. We talked about this, right? Coming right into this overhead supply. And this is a pretty big level for the Nasdaq right now, because this structure here is just different. It was weaker. It was more sideways. But this 282, let's call it here in the Qs, they were the highs from October, highs in November. We briefly broke above it, and we based for quite some time in December, and then we ultimately broke down. So if we can punch through here, if we find follow through fast and early next week, again, I think this can move really quickly here up into the 300 zone in a pretty fast amount of time. I, obviously believe that earnings are going to start to impact this, but it seems like the market wants to run up before those big tech giants start reporting. Remember, Apple, Microsoft, Amazon, they don't report until the first week of February or so. So we still have another 5, 6, 7 trading days before we get there. So, obviously, we've got other companies. I think Tesla's next week, I believe, or Netflix already reported. Its reaction was good. I know its EPS numbers were a little light, but the market gave it a good reaction anyhow. So for the Qs, again, dip buyers stepping up, closed near the highs of the week, managed to add gains this year. And, the yearly candle, which I know doesn't mean a whole lot because we're only 3 weeks in, is already up 6% on the year. So again, the change of pace, change of character. This is something we've talked about for 2 weeks. This shouldn't be new information here. Okay. So, and then the Russell, let's see, take a look at the Russell here. Nice volume push here on Friday. Again, 2-day pullback, starting to march back up. We'll see if these all turn into some higher lows next week. So that really is the bulk of my attention, was just the indices this week. We still got the dollar. I mean, the dollar just continues to stay weak. Can't really catch a bid. We did talk about the VIX and the fact that it was able to, pop a little bit. Seemed like we got a lot of people, maybe chasing for a breakdown or buying protection and playing for the market to roll over. And then that quickly didn't happen on Friday. Again, we'll see if that can stick on Monday. But for now, looks like that fear was sort of wiping out of the market. And I think that's kind of it. So let's move into, we'll finish off here with just a quick look at some sectors scanning and industry scanning. So these are our sets of scans that we use to identify some interesting sectors and industries. If you're a TC2000 user, we have this layout available for you on our website. It is a paid download, but you can definitely get this on your workstation if you want to run these scans and setups yourself. So a couple of notable sectors here on the upside. We got medical care. So healthcare really putting in another heavy volume week, continuing its move up. Again, this is not necessarily a new move. If we go to the weekly chart though, you can see this is really what it's looking at, the big broader move. Look at the volume that is coming in here after a very prolonged downtrend. 37% correction over about a year's worth time. And now you can see just a big break of this trend, or it's in the process of breaking this downtrend. Heavy volume coming in. Looks pretty great to me longer term. Software application getting a good, back-to-back heavy volume week as it tries to break out through some of this cluster of consolidation. That looks pretty interesting as well. And then you get specialty finance here starting to move up to multi-week highs, multi-month highs. And I'm not exactly sure what names constitute specialty finance, but you can certainly look into it if underneath this industry label. Now, if we look on the downside here, we've got beverages. So this is that defensive tone of the market that we saw get hit. So consumer defensive sector, beverages, soft drinks, you can see rolling over. Volume not so heavy, but good, kind of price thrust lower. Confectioners, again, consumer defensive, pulling back again, still in an overall uptrend, but notable underperformance this week. Packaged foods, same thing, defensive tone as well. And then you just have the XLP outright. So this is clearly where some relative underperformance weakness is coming. And quite frankly, if you like risk assets, if you're bullish on, tech or the market, generally speaking, you'd want to see, underperformance in staples. You'd want to see outperformance in technology, communication services, so on and so forth. That's pretty much what you got this week. So that is it for me. And hopefully everybody did well out there. Let me know your thoughts. What are you watching? You believe in this market strength? Leave a comment below. Love to read them. And I hope everybody has a great weekend. So thanks as always for tuning in. Oh, and don't forget, we've got another Trade Risk Live episode on Tuesday, I believe. And double check. If you head to the homepage of our YouTube channel, you should see it, with Felix Bertram. It's going to be a very technical conversation. So for anyone that is building systems or really starting to get more mathematical, quantitative, rules-based in their process, you don't want to miss this week. It's actually something that I'm really looking forward to hear Felix give this presentation. So tune in for that. And if you missed Patrick and I talk on the Trade Risk Live, which was, I think, Tuesday again. Sorry, these dates are not in front of me. Check that out on our YouTube channel. Patrick's a gem and certainly knows his way around leadership groups and strong looking charts. So that is it for me. Again, have a great weekend. We'll see you back here next week.